Good morning, everyone. I'm Martha Stokes, and we are going to talk today about decentralization of the banking system and what's going to happen to all of these banks and how important is the sell-side institutions. I've talked about the sell-side institutions before, but I kind of want to focus on that a little bit today because things are ramping up quite rapidly, and you need to understand who is in control of price and why they're in control of price so that you can be better traders, because I strongly believe that all of you need to raise your expectations. You have such a low expectation out of the market, and that's alarming to me. You can make 6 and 7 digit income if you understand who is controlling price at any given time. You don't predict the market. Once a group of traders or gurus or something start predicting anything, then what happens is it alters whatever would have happened. You want to look at it as a forecast, like the weather for the next 2 or 3 days in the market. How is it going to go? But you have to understand who's in control of price at any given time. The dark pools that I talk about oftentimes, which are the buy side giant institutions, are the vast holders of, they hold the vast wealth of the American middle class. And it's enormous. It's like 350 to 500 trillion dollars worldwide. And they cater, because they're all private entities, they cater to the investors. Their investors are the people who haven't entrusted them with their 401ks. Usually the corporation chooses which one you're going to get, but then you are still in charge of your 401k or your IRA and how it is distributed and how you have a ratio of bonds to stocks or whatever that you choose to do, or if you're all ETFs. I mean, there's so many ways to go these days. And we have decentralization of the monetary system, and it's scary for the banks because with decentralization, it's peer to peer. And so they don't have an intermediary, and so there's no way for them to make any money. If you put some money in your account, or if you're trying to send through something that isn't Zella or something like that, or pay something, it isn't instantaneous. The banks can hold the money. You wash it overnight into any market they want, make some profit, and then put it back into your account. The reason why the interest rates for banks overnight lending from the FRB, Federal Reserve Bank, is critical is because the banks are charged for that overnight lending if they are short in their account in the morning and they can't meet the obligations of their customers that are coming into their bank or whatever to pull money out. But all that's changing with the global monetary system. Some decentralization is occurring, so the banks, a lot of them are moving and shifting to do bitcoins or crypto coins or assets that are digitized and so on and so forth, to see if that's going to work. So I want to know if the buy side thinks that the banks are going to be doing well with this idea that they have. And it's fairly complex. I could spend a whole day talking about decentralization of the monetary systems. Is very complex, and not enough is actually there on the on the internet. If you look, it's still very dicey information. We have to delve deeper than that. And what I'm seeing in the charts is, I say, okay, Goldman Sachs is heavy into coins and crypto coins and digitized assets and so on and so forth. It's moving over there. It has been struggling a little bit, and we see what I see when I go in here and I say, well, who's in control of price of GS? Who's controlling price? What's going on here? Okay, we have a little rounding action that shows a little bit more on the weekly scale. We have a negative divergence from price. We have price pretty much going sideways. We could build a little square around here, but there's some heavy selling periodically, which is not dark pools, because they only control a penny spread. They don't let this big huge candles come down. So this is more smaller funds managers and so on that are selling down. What's boosting this price is Goldman Sachs, of course, has buybacks going on. So it boosts it up and it keeps it in this range. Okay. So, but this is actually a topping action. And we see this negative divergence, which is the dark pole saying, no, we're going to lower our inventory. They will not sell out completely. They don't need to. Look at this nice rounding pattern. They do rounding patterns because they're slowly rotating out, which boosts the number of shares available to trade. So we can see the rounding patterns going on over a period of time. We can definitely see on the weekly scale that this is a rounding top, even though Goldman Sachs is trying to hold its price up. It is at risk. There is some support here, but it's not that strong. And it has the potential to correct a little bit more if it's a concept of switching to digitized assets works or doesn't work. Right now, that's all uh, peer-to-peer, and also we have other big we have coin companies that are already out there that are already doing that, and for a very nominal fee. So it's a heavily congested area to try to change into, and that can be a problem for the banks. So we see on the monthly scale that this angle of ascent is a little too steep. It's pretty steep. So it does need to correct either down to here or down to here. Whether it does or not depends on the buybacks and how well Goldman Sachs manages its own buybacks and what's going on with that. You need to be aware that the sell side is very small. It used to be that the banks and the financial services companies such as GS were the foundation of the stock market back in the turn of the century of the 1900s, and during all the big years of 50s and 60s, then the slower years of 70s and the big years of 80s, the banks were just the central thing. What happens with the banks is what's most important. They were the first to always report, so they could set the tone for the whole time, the whole earnings season. They still do, but they're not important anymore. There's a much smaller group. There are, of course, regional banks, and a lot of the bigger banks are still gobbling those up. But a lot of the regional banks are also becoming more independent and becoming a totally different kind of bank than we have right now. So that makes a huge a difference as well. But what we're seeing is that there is some rotation out by the buy side institutions. Why is this important? Because they do their homework. Because they're always looking at the new technologies. Is this going to work? How fast is it coming to market? What's going on? Because they want to get in on the ground floor. They want to get in and buy at the lowest price possible. And they will be buying stocks on the NASDAQ private market. They will be investing before other things are happening. They won't have that in their 401ks or anything, but they are backing it up early so that they have this to offer out later when it becomes more popular. So they're looking at these things and they're studying all of this activity. And what I see in the charts is they do not have faith in the banks that they're going to succeed at this moving to a distributed ledger and then having digitized assets. And that's going to take over because there's already crypto companies that are already offering those services, and the banks have to compete what is already established in the crypto world. And this is going to be exceedingly hard for them because they're late to the party. And so our big banks may morph into something completely different. What do the sell side institutions do? They make the market. They are market makers. And so when anybody is trying to buy or sell something, they have to make the market by offering it out. Now, payment for order flow, PFOF, a lot of city and other banks have gone to that because there's huge profits in that. Even on the penny spread, they can make a lot of money by paying the retail side brokers for your orders. The retail broker has to light them, of course, as I've said before that order is executed. And it's all done on the millisecond scale. So you have to be aware of who is going on and what's happening, because that is going to tell you the direction the stock is going to take more than any kind of prediction or guesstimate or whatever. So when you look at the charts and you read them and you see the activities, it can tell you, oh, well, this is a sideways trend, but it's not going to hold, or it has risk of not holding. So what do you need? You need to look for setups from the professional traders who are going to sell short. Hedge funds, HFTs, gapping it down, all of that type of thing is possible. It's probably going to be a while because this stock is supported by its own buybacks, and that's what's happening in a lot of companies are holding and supporting their stocks in buybacks. So there's this false sense that these some of these banks and so on are going to be okay, when right now they're trying to make a massive overhaul, a huge shift from centralized banking systems where they make money on every single transaction that happens, to decentralized, to crypto, the crypto world. And that is a huge leap. That is a gigantic leap. So all your banks you have to be careful with and study them closely to see if they are going to have to go through a correction while they're undergoing this massive change from centralized to decentralized. And it's going to start happening, not right now, but in early 2027 and so on and so forth. You have to be aware that that's going to be that situation. Now there's only 5 major banks left and 1 financial services left. The buy side institutions, there are about 25 giant buy side institutions, and there's over 100 of the large institutions that also manage the pension funds, because there's thousands of pension funds out there that are being managed by the buy side institutions. So they're the huge clout. What you want to always do is track the buy side activity and what they are doing. They are rotating out of the stock right now, slowly, carefully, very carefully, getting out of this stock, little tiny penny spreads all over the place. And then they will take that money and put it into something that's going to grow fabulously this year and next. I'm Martha Stokes, and I'm over time. I'm happy to have you join me. Trade wisely and learn as much as you can about the market.